10 years down, dude, there's so many things to check. Oh my God, thank goodness. The 10 years actually falling. The 10 years actually kind of falling. It's not below 4.7 yet, but it was at 4.79 at 5:30 today. Now it's at 4.71. That's good. This is good. This is not bearish. This is good. No one can say this is bad. I mean, the market can have whatever thoughts they want about this, but so far they're saying, okay, so CPI came in line with expectations. It's increasing, but not more than what we thought. It's not runaway inflation that's going to the moon. It's actually lower on the core year over year and month over month, and it's in line on the headline year over year with 2.9, which was what is expected. On the monthly 0.4, that's what we got, 0.4. Not bad. Not bad at all. Dixie, where's Dixie? Dixie is dropping a little bit. Got a little bit of a drop on Dixie. Nothing too crazy, but we do have somewhat of a drop. All right, let's get some coverage on this. Then we're going to dive deeper into the CPI numbers, and then we'll keep going from there. If you're just joining, it's a pretty decent CPI beat on the monthly and yearly on core, and then in line with expectations on the monthly and yearly on headline.
Actually, anybody out there watching that isn't an economist, they feel the pressure of rising prices, and it's a pressure that very much never seems to ease off. We don't normally see a lot of negative numbers. And speaking of negative numbers, there's one I haven't pointed out yet. Empire was also out. January number, kind of real time, minus 12.6. Minus 12.6 would be the weakest going back to minus 15 and change in May of last year. So we still see that manufacturing is a bit curtailed. Interest rates moving significantly lower here, significantly lower. Maybe it was the month over month core. Maybe it's the fact that we came in as or a little light on expectations, what the market prepared for. But like yesterday, we want to watch the secondary and tertiary responses as we get closer to the opening of equities, because it may be a very short-lived rally pushing yields down. And I do want to point out that we have traded slightly on an intraday basis above 480 in a 10. We touched 5% yesterday briefly in a 30, and the dollar index, well, even though it isn't monetized now on Monday, it was at a 26-month high close. Becky, back to you.
Okay, Rick, stay right there. A lot of analysis. We need more from you, but we also want to bring in the rest of our panel. Priya Misra, who is fixed income portfolio manager at JP Morgan Asset Management. Our very own senior economics reporter, Steve Leisman, and Peter Bookvar, who is chief investment officer at Bleakley Advisory Group, also a CNBC contributor. Steve, why don't you walk us through what you are seeing as you dig down into these numbers?
Well, it's a good number. I think it's important. Actually, Rick was using a different consensus, 0.4. We had 0.3 from the Dow Jones consensus. I'm not sure which one Rick is using.
On the headline, month over month.
On the headline. But the important thing is we both agree the core was lower than expected.
SoFi's up 5%. They have earnings in 2 weeks. My goodness. SoFi 15.3%. They're up 6%. Absolutely incredible for SoFi. Robinhood's up 4.69%, 43.74. I am just hoping this can last another hour going into the market open. Robinhood is at basically a 52-week high. I don't think we've ever seen 43.70 even in 2024. Bitcoin's at 98.3, Palantir's at 68.2, Tesla's at 411, and the S&P 500 is at 590. Folks, this is not a bad CPI report.
At 0.2, and it looks okay. It doesn't look, like I said earlier in the last hour, the PPI downside surprise took some of the edge off an upside surprise today, and I think that came to pass. The big number, the number that both of our guests asked before right away, was the owner's equivalent rent number. That was up 0.3. We were doing 0.5, 0.6s, big numbers there. Now it's more contained, a 0.3 after a 0.2. You did have apparel was well contained. New vehicles up 0.5, used cars up 1.5%. That helped it. But take a look at commodities. Let's do services less energy. That was up 0.3%. So not terrific. You need to do 0.2s to get to 2%. But Becky, we'll take it. It's a good number. You can see how concerned the market has been with this possibility that inflation was going to get out of control. So this now sort of says, all right, the Fed can be on hold, but we don't have to talk about this thing that Joe likes to talk about, which is what, the idea of hiking rates.
We're now looking at
Yeah.
the 10-year falling below 4.7%,
Yeah,
4.69.
and while you talk to the other guests, I'll update the probabilities on what
Holy crap. The 10-year is below 4.7. Oh my goodness. That's how you know the bond market likes it. That's how you know the bond market likes it. They're buying up that yield or they're buying up that bond to lock in that yield because they don't think, at least today, that yield is going higher. And you're getting some activity in the bond market. Wow, 4.694. If that bad boy comes down to 4.6 or maybe 4.55 by the end of the week, that is not going to be bad for equities. That's really not going to be bad for equities. Maybe we don't have to delay the rate cut all the way until October.
what the outlook is for the Fed and how that's changed. I
Yeah,
got to do the
and
math.
Priya, I would say that, look, the Dow's now indicated to open up 600 points, but that's going tick by tick with the treasuries. You focus on the treasuries market, on fixed income. What do you think of what we just heard? Is this the right reaction based on these numbers?
Absolutely. I think we were in the danger zone. As the 10-year got closer to 4.75, 5%, I think it's a danger zone for the economy because there are interest-sensitive sectors. Look at the mortgage market or the housing market. Look at other interest-sensitive sectors. We're also in the danger zone for risk assets because, cost of capital that high, you're going to get more dispersion. You're going to have impact on multiples. I think this is a good number. It's a sigh of relief for the bond market as well as the equity market, risk assets in general, because it takes that Fed hike. I think, we priced out a lot of the Fed cuts in the last few months. And now there was talk, well, if inflation's moving up and the big question still remains, what are we going to get from the administration? I would argue there's a market constraint, there's a political constraint. I don't think you're going to get that much, but I also think that that's behind in the market's mind. Are we going to?
She's right. We needed this number. We really needed this number. Let's go to the BLS. Let's get the actual release that they put out here today. And let's go a little bit more deeper into this. But that's not Mrs. Kukreja, dude. You guys are crazy, bro. All right, here we go. CPI index for, so let's get through some specifics. Index for energy rose 2.6% in December, accounting for over 40% of the monthly all items increase. Wow. So this time, guys, holy crap, this is bullish. Holy crap. This time it's not shelter. It's not shelter. Every time we read one of these things, it's shelter. It's always the index for shelter rose, which is accounting for over 40%. This time it's energy. And if it's not shelter as the headline justification for the increase in CPI from 2.8 to 2.9, then that means shelter theoretically is coming down. And if energy comes down, I know energy has been going up because of everything that's been going on with the Russia sanctions and in general, Europe struggling. But if that can come down over the next 6 months, then and shelter comes down, inflation's coming down. It's absolutely coming down. The gasoline index increased 4.4% over the month. The index for food also increased in December, rising 0.3%, as both the index for food at home and the index for food away from home increased 0.3%. The index for all items less food and energy rose 0.2% in December after increasing 0.3%. December included shelter, airline, used cars and trucks, new vehicles, motor vehicle insurance, and medical care. So the usual suspects that increased in December. However, the reasoning for 40% of the increase, the majority of the increase, was not shelter, was not airline, was not used cars. It was energy. And if that one comes down along with the other suspects, then maybe we will get inflation actually coming down pretty aggressively. So energy was the main thing. Medical care increased 0.1% month over month. Airline fares up 3.9% in December. Kind of makes sense. You had some more traveling. The index for all items in less food and energy rose 3.2%. Motor vehicle insurance, that thing needs to come down as well. Hopefully it does, but that's why the 0% APR from Tesla deal was so good in November, because cars are getting a bit more expensive. And then the index for personal care also came down. The index for communication and alcoholic beverages declined month over month. So alcohol came down, communication came down, shelter, energy, and airline fares, along with recreational products, went up, and motor vehicle insurance. That's not bad. That's not bad. That's not bad at all. Oh my gosh. Is Robinhood about to hit 44? Is it actually going to? Wow. 43.85. Goodness gracious. That's up 5%. Tesla's up 4%, 3.5%, 410. S&P 590. SoFi 5.3%. It's looking like the dip at $13 or $13.50 on SoFi was a great dip. Grab is up 2% on this, 1.86%. The dollar's not coming down as much, but the 10-year's coming down a little bit more. Meta's up 2%. Uber's up 2%. Amazon is up 2%. Oracle's up 2%. Snapchat's up 3%. Rivian's up 3.6%. TSLL is up 6.4%. MSTR is up 4%. Where is Bitcoin? Bitcoin 98.4. It's not really giving away too much of its pump right here. If this can continue, maybe we see a little bit more momentum into the 100,000 range, hopefully later this year. Not bad, not bad at all. This is a hell of a market open as we get into 9:30. So let's ask the poll, which is the right thing to do right here, based on how we're seeing people think of this. Do you think this is a rug pull? That's the question. Do you think this lasts at 9:30, or do you think people take their sweet, juicy profits and get the hell out? Is it a rug pull? By 9:30, can we keep Robinhood at 44? Can we keep Bitcoin at 98? Can we keep Palantir at $68? Can we keep NVIDIA at 135? Can we keep SoFi at 1530? SoFi was there 2 weeks ago at 1530. Theoretically, this shouldn't be that hard to maintain, especially after I got an upgrade yesterday for $18 by Citibank. But can it stay there? Rocket Lab as well. Great day for Rocket Lab. Did anyone watch the Blue Origin thing last night? Was it good? Rocket Lab up 5%. Did Blue Origin actually get the launch to be successful? Because I did not get a chance to watch it. Rocket Lab up 6%. Yes. Where's Farcoin? Yeah, let's take a look at Farcoin. Farcoin's down 2%, bro. This is bullish. This is so bullish because that means never mind. It just updated. It's up 5%. Never mind. That's bearish. Because if Farcoin comes down, that means money's going into the shit that deserves to get the money. Not Farcoin, but Farcoin's up. It's going to pump with everything. As soon as Farcoin goes down and Tesla goes up, that's how you know, all right, we're getting some of the froth out of the market. But so far, it's still there. 61% say no, it's not a rug pull. Well, we will find out in about 45 minutes how bad this thing ends up becoming, or if it keeps going. Dude, if we get a real rally today, a real rally means we keep these prices until market close, and then Friday, which Friday is going to be a very important day. Friday is January 17th. Friday is one of those days where you are going to have hundreds of billions of dollars in options expire. Why? Because in 2023, one of the only leaps that was available was January 17th, 2025. I know this because I was buying Robinhood leaps at the time, and the only leap, one of the only leaps, there was like a couple other dates, but one of the main dates that was available for 2025, if you wanted to go 18 months out, was January 17th, 2025. So there are a lot of options expiring on Friday that might create some wonky stuff that's going on in the options market, which could affect equities. But if we can hold these levels, maybe we can withstand that as well. Robinhood right here, 43.85, Palantir 68.28. All the banks, for those that are just joining, all of the banks crushed it. And when I mean crushed it, they absolutely smashed earnings. JP Morgan, Morgan Stanley, BlackRock, all of these guys absolutely crushed the numbers they needed to crush, raised the dividend, increasing the buybacks, all of the stuff you want to see from banks. They were able to do it. Let's get a couple updates right here on some of the banks. But they did what they had to do. CPI had to do. And now we just need tech to do what they have to do as we get into earnings over the next 2 weeks. Here is Citigroup.
Earnings, I guess, right?
Yeah, go ahead. And Leslie Picker has those numbers. Leslie?
Hey,
wait, hold on. Citi's going to have to wait. Is Robinhood above 44? Is it actually above 44? Is it above? Oh my God, it's above 44. Holy crap. I don't want to get too excited, bro. I don't want to get too excited because 9:30 is a long time away. I don't want to get too excited, but congrats, guys. Congrats. We got 44 on the hood. Again, I don't want to get too excited. We got a major upgrade yesterday by Morgan Stanley. I wrote about it last night on Twitter. $55 added them to their financial top picks. So they're gearing up for almost $1 billion of revenue in the fourth quarter. I think they're going to do well, but we got to see if they can maintain all this momentum as we get into the market open.
Becky, that's right. It's a beat on the top and bottom lines in the quarter for Citi. But the notable news for the street is Citi's reduction in its profitability targets, which are seen as a key metric by which to measure the firm's turnaround efforts. For the last few years, Citi had been targeting between 11 and 12% on return on tangible common equity. And today they are reducing that range to 10 to 11% by 2026. That's still higher than the street expectation, the street average. And the fourth quarter ROTCE figure was just over 6%. CEO Jane Fraser saying in the release that the reduction in ROTCE targets allows them to make, quote, additional investments in our business and transformation. And the, quote, level is a waypoint, not a destination. We intend to improve returns well above that level and deliver Citi's full potential for our shareholders.
I mean, that quote alone, we plan to deliver our full potential for our shareholders alone. Like that entire idea feels bullish going into 2025. And the fact that they're actually doing a $20 billion buyback as well, which I don't think she mentioned, but that was another headline, means they have money that they feel comfortable giving back to shareholders by buying back their stock because they know that their earnings are good. Here is Goldman Sachs.
With its results, Leslie Picker's been going through those numbers. She's going to bring to us right now. Leslie, what you got?
Hey, Andrew, those shares higher on these results as well. A very big beat on the bottom line, beating by about $3.73 per share, coming in at $11.95 per share in the quarter. That's about 45% higher than estimates. On the revenue side, that was also a beat.
40% higher than estimates on EPS. Like, bro, it's not a joke. These aren't made up numbers. These are real. And the market cannot ignore that the banks are starting off good earnings. Now, imagine if tech companies, particularly the Max 7, also have these types of numbers. They're probably not going to beat by 40%, but if they even beat by 10, 15% at their scale, you know, the market's definitely going to say, all right, we can't really deny some of these earnings that we're getting right now.
Coming in at $13.87 billion, which was about 23% higher year over year. Return on equity annualized for Q came in at 14.6% for Goldman Sachs. In terms of the individual drivers for that top line there, the top line growth, you got to pin it on what we're seeing with sales and trading. FICC and equities each higher by more than 32% in the quarter. FICC deriving $2.74 billion. That's fixed income, currencies, and commodities, whereas equity came in at $3.45 billion for the quarter.
Absolutely incredible by Goldman Sachs. So obviously you can see the banks are running. We also had Morgan Stanley, BlackRock. We'll listen to BlackRock CEO in a little bit because he was on CNBC. But all of them, the story of the day is that they crushed earnings. And that's why SoFi, which is a much smaller bank than those bigger banks, is up 7% because they're growing faster than those big banks. And if those big banks are crushing it, I mean, this makes sense for SoFi. This makes, like, if JP Morgan, Goldman Sachs, et cetera, crushed it, and SoFi, which is, we know, growing faster than those big banks, they should absolutely smash Q4. And maybe SoFi's on its way to $20. I mean, maybe it's time. SoFi right here up 6.3%, 15.41. NVIDIA's up 1.8%. Bitcoin, 99,000. We went from 96 to 99,000 right here on Bitcoin. Palantir as well, up 4.6% right here, 68.97. It looks like it'll crack 69. It got rejected at 68.23 yesterday, 2 cents away in the pre-market from cracking 69. Let's see if it can get above that level. There you go, 69 right there. It's teetering from 69 to 68.98, but right there, 4.65% on Palantir. Robinhood, $44.08, up 5.56%. Absolutely incredible. The S&P 500, 591. S&P was at 575 on Monday. So talk about a nice reversal here based on this data. Morgan Stanley, 3%. Goldman Sachs, up 4%. JP Morgan, up 2%. BlackRock, up 5.3%. Grab is up 2%. Warner Brothers Discovery is up 4%. SoFi CEO Anthony Noto is joining the board of directors of Warner Brothers Discovery. I don't really understand that move that well. I'm assuming there's some type of partnership he thinks is possible between WBD and SoFi. I know WBD and Citibank have like a credit card together. So maybe, I think this is more, I don't think he wants to join the board. I think there's something strategic here for SoFi. I just don't know what it is yet, but seems like that will be something we figure out over the next couple months. Amazon right here up 2%. Oracle's up 2%. Snapchat's up 3%. MicroStrategy up 4.7%. Lyft is up 3%. DJT is up 2.8%. Apple's up 1%. And then Rocket Lab right here up 3.48%. Tesla as well, 3.5 back to 410 on Tessie. Not bad. Not bad at all. Yes, there is a credit card thing with SoFi and Citibank and Warner Bros. Discovery. So I think that might be the reason he is joining their board as well. Did I say teetering wrong? It's teetering, not teetering. Okay, well, you guys know. If you're new here, you know I don't know how to say words. So there you go. There you go. Archer's up 6%. Okay, that's amazing. So let's look at the spec plays. Okay, so we have an update on Quantum. Let's talk a little bit about Quantum real quick, and then we'll get into all the headlines we have to get into for this morning. So spec plays are all up a lot. Archer's up 5%, SoundHound up 5%, Faraday Future up 2%, Big Bear up 6%, MicroStrategy up 5%, GameStop, AMC up 3 and 4%, Oaklo's up 5%, Color's up 8%. But then you get to Quantum, QUBT's up 17%, Rigetti's up 16%, IONQ's up 9%, and then D-Wave is up 26%. Now, why are the Quantum names up basically, call it 20% on average this morning? Well, remember that guy who said Quantum's 20 years away? Well, NVIDIA is hosting its first Quantum Day on March 20th, 2025. Executives from companies like Rigetti, D-Wave, and IONQ are going to participate. Jensen Huang is going to host discussions with industry leaders, and sessions will explore current and future quantum computing capabilities and technologies. So, I mean, look, either Jensen, I don't think Jensen was intentionally trying to tank those stocks, by the way. I think he was giving a genuine answer, which was like, hey, I think it's far away. But, I mean, if it's that far away, why host a Quantum Day on March 20th, 2025, which last time I checked, it's not 20 years away. It's like less than 2 months away. And maybe he still believes the technology is 20 years away. But I mean, if you're hosting not an investor day, but like a quantum trading day that quickly, then maybe the technology is going to be sooner than later. Again, we're going to have to find out kind of how this plays out. But the quantum names are running off those headlines. Obviously, are these names, trading at pretty elevated multiples? Probably, right? QUBT is trading at a 1,500 price to sales. Rigetti's at a 76. IONQ's at a 360. D-Wave's at a 76 times price to sales, and none of them are profitable. However, if you're buying these names, you're not buying them for earnings. You're buying them for potential. And so at least those who bought the dip on the potential, Jensen and Microsoft yesterday, Microsoft said that they are interested in exploring the future of quantum computing. They put out that press release yesterday. You put those two together, along with the fact that these names were down 80%, you're going to get some people to buy the dip. And as a result, we are seeing some of that momentum in the pre-markets with the quantum names. And then if CPI comes in lower than expected, which gets the market to be a little bit more risk on, then yeah, some of those risk on names are going to get some love. And that's what we're seeing right now as we get into the market open. Coinbase right here is up 4%. Bitcoin just below 99. CleanSpark's up 5%. Marathon's up 4%. Hut 8 Mining's up 5%. MSTR is up 4%. Hood's up 5.3%. And BitX, 2x leverage Bitcoin, is up 5.25%. currently right now. Chris CRM says Quantum will be 20 years away until it's only 3 to 4 years away. Microsoft is repositioning for Quantum. I'm light in Quantum and might buy up over the next few years. Right now, focusing on software. Yeah, that's fair. Look, 20 years away might turn into 5 years away, or it might turn into 25 years away. It really depends on how much progress is made in the industry. But if you're investing in it, then you do believe it is hopefully sooner than later, or you at least want to be there regardless of when it happens. And that's probably why some people are buying these names. Let's look at the semis. The semis are all green as well. There's not a single semi that's red. Intel, SMCI, AMD, NVIDIA. AMD and NVIDIA both up 1.5%. Dell's up 2%. ARM's up 2%. Marvell's up 2.5%. Taiwan Semi's up 0.5%. Qualcomm's up 2%. Broadcom's up 2%. ASML's up 0.33%. ON is up 2.5%. And Intel is up 1.6%. The semis are enjoying it. The NASDAQ, the QQQ, is up 1.71%. And the S&P 500, 1.5 at 590. Not bad. Not bad at all. 62% of you guys think we're not going to get a rug pull. 38% think we are going to get a rug pull. We have about 35 minutes until we see if we actually do get this rug pull. CPI is not out tomorrow. CPI is out right now. And for those that missed it, CPI came in at 2.9%, in line with expectations. That's what the market wanted to see. And the core inflation rate came in at 3.2% versus 3.3%. That is also what the market wanted to see. So, look, that doesn't mean inflation is not increasing. Inflation is increasing. It's just increasing slower than what all the bears think it's increasing at, which is like, some exponential increase that is unsustainable. And that's not happening, at least not on December CPI. It is much more in line with how the market thought it would be. Also, sentiment was horrible, bro. Sentiment, like going into the CPI, even after the PPI pump and that got faded at like 3 o'clock last night, sentiment was like, all right, inflation's back. The 10 years never coming down, yada, yada. So we had really good sentiment decline. Wow, the 10 years at 4.68 in order to have this type of a pump, because you need sentiment to be at really bad levels, right? In order for us to get a really big move. And I would say last night it was. I would say last night, especially at 3 p.m., it was. The dollar is, wow, the dollar's below 109. The dollar was at 110 on Monday. It's at 108. And the 10-year was at 4.8. Forget yesterday, at 5:30 this morning. Now it's at 4.68. Pound here's at 69. Dude, this is not bad. This is not. I'm trying to think. I'm trying to get the nuance here of like, why is this bad? What are we missing? Outside of a rug pull algorithmically, why would the market sell off their Palantir or their hood to get into the 10-year on this, right? Or why would they sell the 10-year when they know that the 10-year is coming down and they want to lock in a yield? I mean, we're still at fear on the fear and greed as well at 27. We were at extreme fear, I think, for a little bit yesterday. And now we're at fear. Is Palantir trying to go back to 70? Is it actually trying to go back to 70? Palantir is at 69.06. We hit 69.12. The only fear I have, guys, is can this really last when the floodgates open at 9:30? Because, I mean, historically, CPI tends to be a sell the news. It then recovers pretty quickly, like either in intraday or within the next couple of days. But CPI pumps tend to get faded. Like we've seen this time and time again. So it gets really excited in the pre-market, and then the market opens and people use it as exit liquidity, essentially. If that even happens, I don't think that's a big deal because it's, we got a long year coming up for us. So if that happens, it's whatever. The point is, honestly, even if stocks were down right now, I wouldn't care because we want to see the numbers go in the right direction when it comes to inflation. And as long as the numbers are in the right direction, the stock market will do whatever it wants to do. It'll eventually get to the point where it corrects itself and matches expectations accordingly. But we needed CPI to be good, and CPI was good. That's what we needed, and it looks like that's what we got. So I think we do have to wait until the potential rug pull, if it happens or if it doesn't happen, but it's still very, very nice to see these numbers coming out. I mean, look, the worst thing we could have got is freaking 3% on inflation, right? Could you imagine it was like 3%? Like that would be horrible, or 3.1%. Like it just wouldn't be a good situation. And so the fact that it came in lower is not too bad. Let's get a little bit more coverage on CPI, and then we'll get to the headlines of yesterday night, which do have some implications for stocks today. Oh, XRP, yeah. Congrats to anyone in this and Steve. I mean, XRP doing its thing. So 286. XRP was projected yesterday in a JPM report to get $8 billion of ETF inflows along with Solana. So if the XRP ETF does happen like the Bitcoin ETF, that could be another catalyst for XRP.
Can you bet on it?
So on the good side, we've already seen all the disinflation that we wanted to see. In fact, around zero year over year was really the pre-COVID trend on the good side. The services side was really what was keeping overall inflation elevated. And I do expect that to further decelerate as lower rents work its way through the number. I think the key question, though, is there's one thing to have a spike in inflation, the deceleration. There's another thing to keep inflation down. It's the sustainability of keeping inflation lower that still remains to be seen, because we got a good inflation number. It's still kind of sideways around this 3-ish level, which is still quite different from the 1% to 2% trend that we saw pre-COVID. And then that flows through having interest rates higher for longer. And the interest rate move is not just a US thing, it is a global thing. And one of the good setups into the US CPI number was a less than expected UK CPI number that took some of the heat off the gilt market, which was a good setup for a rally in treasuries today.
And he's right about that. I forgot to mention in the UK market, to all my folks out there in the United Kingdom, which hopefully I am going to be visiting in the summer. A lot of you guys are there. I want to visit the United Kingdom. It'll be fun. Inflation's down in the UK. UK inflation slows in December. Headline CPI 2.5% versus 2.6 expected. Core 3.2 versus 3.4 expected. Lowest since September 2024. lowest in the past 4 months. Services inflation dropped to 4.4% year over year versus 4.8% expected, the lowest since March of 2022. So you're getting the UK to show that their inflation is going down. The United States inflation is going down. As long as we see this across the entire world in the more developed economies, then this is great news for inflation globally, and obviously great news for equities as they need global inflation to slow down in order to continue going higher. So it's not bad. Not bad at all. We are starting to get a little bit more momentum in the CPI market or in the inflation market. Now, again, January has been a little different than December. Energy has gone up a decent amount in January. So January CPI numbers are going to be very interesting. We have about 15 days left of January to see how this plays out. But as long as we stay in this trend, or even if we go up according to market expectations, if not come down, then this might be a sustainable path to getting inflation to come down. It's funny because, again, on Friday, Bank of America said we see no rate cuts coming in 2025, and off of some number, like off the jobs data that came out. And it's like, are they going to change their tone now that we have CPI that looks pretty decent? Because, like, I don't know how you can assume 0 rate cuts off of a labor market when inflation is at least stabilizing. So I think it's going to be tough to just decide on 1 or 2 metrics. Even this CPI, we have, more to see over the next coming months if CPI is sustainable enough to keep going down. But still, to make a definitive claim that we are getting no rate cuts because of 1 or 2 metrics, it feels very deja vu to 2024, where we thought we were going to get cuts. We had about 5 months of sticky inflation and everyone wrote off the cuts. And then by May, it looked like inflation was falling off a cliff. By April, by September, we knew it was falling off a cliff, and then we cut by 50 bips. And then we ended up getting a lot more cuts towards the end of the year. Maybe the same thing happens in 2025.